Hello everyone and welcome back to another video. So as you can see today we are going to be going over Cowen, but before I do, please do consider subscribing if you have not already. I really do appreciate it. Please do consider subscribing. So let's get into Cowen. This is an interesting one and I'm actually thinking about buying this for myself. So Cowen is as of the close of March 4th 2022, it closed at close to like $29. And as we can see, the average price target is $60 for this based on 3 strong buy ratings. And that's 110% upside. Cowen's is like a financial they do like investments, they do banking, but I believe that they also do like ratings and they have like analysts, and they have, like outputs on different kinds of, topics as far as how they think the markets will go. And they like issue research and stuff like that. So with that being said, I think Cowen's is an interesting one, and it also pays a dividend too, by the way, and we'll look into that. But the stock analysis for this one is a 10 out of 10. And again, I usually recommend only things that are 7 and above. So obviously a 10 out of 10 is very good. We do like to see that. Now for Cowen's income statement, we can see that they have just been exploding with growth so far. So again, they're kind of like a bank. Like they do have different like banking revenues, but they also issue research, and they also are like known for that. But this is just huge. Look at that, 2.1 billion at the end of 2021 as of December 31st for what they reported for the full year, when like back in 2016 it was only 493 million. So that's huge. They just have so much growth, and we can actually see that they actually do have a pretty good net income as well of about let's see, about 304 consolidated net income of 304 million. So again, that's pretty good. It's like a 15% profit margin. So that's what we like to see. And how Cowen's, like, again, it just has good top line revenue and it has good growing profit margin when you look across the previous years. And so Cowen, if you look at the balance sheet, we can see that they have total, let's see where the total current assets are. Well, actually, it just looks like they list total assets because it is like a bank almost. So 8.7 billion in total assets and 7.4 billion in total liabilities. And they do have some, it looks like, long-term debt, which has been growing, but it's not too bad. This is a bank, and that's really not that bad at all. They have some short-term debt too, but again, not too bad. And then their total cash, that's growing. So that's what we like to see, 1.1 billion growing in total cash. And they have different kinds of investment securities as well, because they are much like a bank. So that's what we like to see. And yeah, let's go on to the cash flow statement. So obviously we start with 304 million. That's a positive net income. And then if we go down on the list, it looks like we have acquisitions. They made some acquisitions in 2021. That's what we like to see. We can also see, as far as like cash from financing activities, we can see that here's long-term debt issuances. They basically repay as much, if not more, than what they issue. So that's what we like to see. You're slowly paying down debt at the same time you're reissuing at probably a lower interest rate, or for different reasons for different instruments. So that's what we like to see, is that you have that your CFO has some wherewithal to start paying down debt like that. Equity issuances, they don't really issue equity. That's what we'd like to see, but they have been repurchasing. So they actually purchased 160 million in their own shares in 2021. That's way more than they've ever really done, even like historically. So that's what we like to see. Dividends, they started paying dividends, it looks like, in 2020, just like a little tiny bit, and that continued into 2021. And again, we like to see that because they are a bank, and they are an investment bank, and they should be doing something like that. They do have enough cash to definitely do it, so I like to see that, and that's kind of why I'm interested in this. It's pretty cheap. It has a good upside as far as like what the analysts think, and it does pay a dividend, so that does get discounted. That does make the stock a little bit more discounted compared to other growth stocks, especially in the bank and finance industry. And so we can also see that the net change in cash and equivalents, again, it's a good cash flow. It's good cash flow that they have. We like to see that. In Cowen's, if you had invested $10,000 as of January 2018, we can actually see that it's grown now to $22,000. So in about 4 years, you get about a 21% CAGR. The only thing that I will warn, though, is that the further back you go, so like the older Cowen's data, if you actually look, it actually says right here that it was the data is available from August 2006. It's probably when they IPO'd. If we look back, you'd have lost quite a lot of money. So if I do, it's actually sorry. So the data is January 2007. So like look at here, let me go back. Here, all these losses: 55% down, 33% down, 20%. Like it just lost for like 6 straight years before it went up like 60%, and that's really hard to come back from. Look at how much that balance like lost before it even remotely got back to like a 60% jump. That's how little it moved up when you compare it to like the previous years of how much it fell down. So I would caution you that this is and it's even down like 17% now, which is why I haven't pulled the trigger, but I am interested. Is that like this thing, it just has tanked over the last few years, unless you had literally gotten in like the 2018 2019 timeframe. Then it's been something different and it's been like a worthy investment. But other than that, it seems like it really has not really paid people very well to hold and own this. So I don't know what other people think of this, but I'm curious, let's just say that. So with that, I hope you guys like this video, and I will see you soon.